We hope you are excited for Fintech Demo Day, Techstars, as we join our lovely moderator and panel speakers to explore Fintech and the digitisation of old industries. I'll let Kartik Varma, the Managing Director of Techstars, start the conversation.
Thank you very much. Good morning, good afternoon, and good evening to everybody, and welcome to this session. Financial services is not immune to the whole wave of digitization that's sweeping different sectors of the economy. In fact, it's probably one of the biggest sectors that's experiencing this dynamic. I'm delighted to welcome Tom, Hedi, and Rob to talk about how old world industries and incumbents are digitizing right now, and how transparency through the use of technology and data is rendering many old world industry processes a lot more efficient. So perhaps we could start off with each one of these three founders giving a 10-second introduction on what is it that their business does. Hedi, why don't we start with you?
So hi all, I'm Hedi. I'm a CEO, co-founder of a company called Cachet. Cachet is a marketplace for gig workers. So we are selling dynamically priced insurance, and in the future also other financial services to people who work flexibly. For example, Uber drivers, different delivery people, and so on and forth. Thank you.
Thank you. And you're based in Estonia, so that's probably a good bit of context for people to have. Rob, how about you? Welcome to the panel. Tell us about yourself and Offr.
Thank you very much. Indeed, I'm the CEO of Offr. We are based in Dublin and London, and we allow properties to be bought or sold with the tap of a button on a smartphone. So we digitize the property transaction from sales to lettings, and we're for the real estate industry. So estate agents use our technology on their website to allow fast, transparent property transactions. And we are expanding into lots of different countries around the world.
Thanks, Rob. And finally, Tom, what are you digitizing today?
Thanks, KV, and hello, everyone. So my name is Tom. I'm the co-founder and CEO of Paid. Our mission is to create equal opportunities for all sizes of business all across the world, giving large businesses agility and innovation capability while giving smaller businesses economic strength and access to those real standout clients and wider business opportunities.
Excellent. Thanks very much for that summary, all three of you. Tom, let me start with you. Why is it that what is it that you're doing now couldn't have been done 10 years ago? You're working with large enterprise clients and you're helping them engage with their smaller suppliers. That already happened in many different forms and shapes over the last few generations. What is it that you're doing now that is so unique?
Thanks, KV. Yeah, no, that's correct. I mean, these processes have been in place, I guess, since the beginnings of ERP, probably 20 odd years ago. But what's changing now as we move into, I guess, the more digitized revolution of existing processes is that we've really been shown the way by things like challenger banks revolutionizing the banking process to make it as simple as a couple of taps to have a bank account. Well, other sectors want that same speed of reaction and the ability to move from thinking something to actually doing something in near real time. The businesses that we're serving traditionally have to put up with 3 to 6 months processes, and that's a lot of human time involving various different systems. What Paid does is it simplifies and brings together a whole series of features and functions that allow an enterprise to work with a small supplier in a matter of minutes. So from months to minutes, we say to our potential customers, and that really gives them then the ability to be more agile with who they want to work with. It allows them to tap into innovation as quick as they can think about an idea. But also it gives these small businesses the chance to work with these marquee customers and really build their reputation. And as the world, I think, moves to a more decentralized model of people wanting to do their own thing and be specialized in certain areas, we're seeing an increase in small business ownership right across the world. And we believe we can be on the forefront of empowering this new revolution.
This speed and agility that you're talking about right now, Tom, often when that happens in industries and processes change, there are some people who always lose out. But it strikes me that what you're doing, there's nobody who's actually losing out from the improvement in the speed and agility that you're bringing about. Is that the right way to understand that?
Yeah, that's exactly correct, Kibby. The business was already happening now. It was just happening very slowly and very inefficiently. So what we're doing is really enabling both sides to be the best at what they want to be. And that's a real core driver for us for Paid. And having this duality to our offering means that we can service both sides of the big business, small business coin.
Got it. Let me move to Hedi. Hedi, you're also serving two sides of a business. You talked about gig economy workers and large platforms like Uber, but what you're offering is a service for a constituency of people that didn't used to exist 10 years ago, the gig economy worker. Tell us a little bit about what are their needs and what solution can you and Cachet provide to them?
Yeah, it's an interesting to think how fast the industry has grown. So gig economy really got this growth after the previous bigger financial kind of downturn, 2007-8, when many leading platforms were born. So now the numbers have been doubled and tripled. So there is, for example, in UK, 1 in 10 persons either work full time, part time as a platform worker in a way. Yeah. So it's not anymore a small niche number. It's actually quite many people who work and prefer to work like that. So so what has really changed and why there's an open discussion and many companies like what are we doing to help them is, for example, insurance in many cases is just priced unfairly towards many. Because if you're a gig worker, you can be someone who works 2 hours a week, or it can be someone who works literally full time. If you take the same example like Uber driver, it can be someone who provides a couple of hours after working somewhere else, or someone who works basically full-time taxi driver. And to price their insurance as a full taxi driver, which is a big problem in many markets, is literally unfair for the one that drives very little. And obviously, it's not that black and white. But to some extent it can be as well. And this is a kind of a bigger issue in the whole gig world, is how you can calculate the risks, because there is no such a thing existing as loyalty or one employer. And obviously there are many discussions around that as well, if Uber should be an employer or not. But what we have seen from many surveys and researchers and questionnaires done is that many and even majority of the people who work gig, they don't want to be employed by anyone. That's the whole reason why they do it. So and they have no loyalty. They work in many places same time, which means that it's hard to know how they're working. And this is basically what the Cachet has built and done. We have connected, if you're talking about, let's say, ride hailing, we have connected with all the ride hailing platforms in the markets we exist, and we get the data about how many hours one single individual or vehicle is providing service, so we can actually give a very good view of the risk to the insurers. So that's basically the whole concept in a nutshell.
Right. So clearly the nature of the workforce is changing, and what you're doing is you're capturing all the data that is unique to every individual gig economy worker on where he or she are working and how their risk should be priced. But your counterparty is a set of insurance companies who've been doing business in a certain way for hundreds of years, and they're very difficult to change their business practices. What kind of experiences have you had on, their openness to working with you when you're providing them with lots of granular level data on how risk and insurance for a particular event or individual should be priced?
So obviously we are not going to challenge the models that some of the insurance companies have built for maybe a century, but what we are challenging is everything connecting with the kind of new way of working. So what we as a company add on is literally the risks, what are being added on and maybe mispriced a bit in connection with how people are working, and what we see ourselves as a kind of good partner for the insurers who are interested in that segment but don't know fully how to kind of get the risks together, because it's not an easy task. And these are the companies we love to work with. So in a way, we are helping them to create added kind of risk risk scoring models which complements their existing existing kind of solutions. So.
Great. Well, it's a massive week for the gig economy this week with the IPO of DoorDash and Airbnb. So it's clearly a sector that'll have just a lot more going on in the coming next few decades. Let me move on to Rob. Rob, you're also working in a sector where, in some ways, some people may see you as a challenge to the incumbents who are the real estate agents who've been set in their ways and very stubborn about changing. It's a very old-fashioned industry. What is it that you're doing today that couldn't be done 10 years ago?
Yeah, the property industry is one of the later industries to be going along the start of the journey of being digitized. And we are actually assisting the incumbents. So, you know, the property markets of the world are very much in the hands of the professional advisors. And the professional advisors are unchanged in 100 years in many ways on how they deliver the service to their customers who are buyers, sellers, tenants, landlords. So what we provide the technology to allow the brokers to provide a fast digital experience to their customers, which means that actually offers can be made online to quickly purchase property or to rent property. And 80% of telephone calls and emails are replaced with self-service for the users of property, all on the website of the broker or the estate agent. So it still allows the property professional to be the advisor on the transaction, but it digitizes and automates over 80% of the process. So it can take maybe 3 or 4 months off the time frame it takes to transact property, because property, as we've all know, if we've ever bought or rented a property, commercial or residential, there are so many industries involved. There's the property industry, there's the legal industry, there's the financial industry, and hence it's fintech.
Sure.
Can you hear me okay? Sorry, my screen just changed.
Yeah, we can hear you okay.
Yeah. So it by providing this little piece of technology on the broker's website, it allows customers to quickly access legal documents, submit formal offers, and sign contracts and pay deposits from the comfort and safety of their own home or office or car or holiday, wherever they are.
Yeah, yeah. And so all three of you obviously, you know, are taking on large enterprises, large industries that have been quite set in their ways, and you're coming at it from the side of a young, agile, and nimble startup. Tell us about what kind of response or reaction you get from your counterparties on the other side. Is there an attitude shift that you're seeing at their end where there is a sense of urgency that they also have because they fear the world is moving on and they are getting left behind? Or they're still very much stuck in their old ways of doing things and somewhat complacent about that? That's an open-ended question to any one of you who wants to start off with that.
I could probably take that even just from my own experience of the real estate industry. I think COVID has played a huge part in this. I believe in the real estate industry, we've seen 10 years worth of behavioral and attitudinal change in the space of 10 months.
Yeah.
And I think that there was an acceptance and an understanding previously that technology had a role to play, but I think it was seen perhaps as a kind of behind the scenes, backroom type process, whereas now it has clearly been seen to be very much to the forefront. It's actually digital first as opposed to digital second, and that's been a big change.
Right. Tom, is there anything you'd like to add to that digital first environment that we're finding ourselves in? Is there an urgency in the decision-making committees that you're pitching to?
I mean, we're still early in terms of like a big sample, Kartik, in terms of who we're speaking to. But what we are seeing in our conversation is that those organizations who are very large, who have specific resource to think about digital transformation, are the ones who are moving the fastest. So for example, we have one big telecoms client, and they have a whole team that are dedicated to bringing on new technologies into their business as fast as possible. Now it's still a big listed company, so things don't happen as fast as any startup would like. But the attitude is right, and the support as well. So this particular client of ours have been incredibly supportive publicly, and moving their internal processes as fast as they can. And I think to Rob's point, I think we have seen this speed up during COVID, and I think it'll continue. I think the momentum will continue even into the recovery phase, because the changes have already been started now, and I think that's exciting for any startup who's digitizing an existing slow process.
Right. Hedi, there was a reason why I wanted to bring that point about your origination from Estonia. Estonia is one of the most digitized countries in the world. The government is also highly digital in terms of its works and processes. What experiences do you have personally that you would like to share with the audience today on how is it that even something as old-fashioned as government can move into the digital age very, very efficiently?
Well, I'm still being slightly humbled of being in a Singapore FinTech festival, where Singapore is obviously incredibly digitized and not gonna push Estonia in front of them. But obviously there are some great things that we have definitely contributed as a small country. Where we got our independency with a very little, I would say, legacy, we had a chance to build up everything very efficiently. And well, being still young enough, I'm always laughing that I've had few companies, and before I flipped one of my companies to Ireland, I've never signed physically any paper. So I've always signed everything digitally. Sorry, Rob. But I had to mention it. This was a learning curve. But
Hedi, you're very welcome.
Well, but yeah, this is the thing. This is the reality. We are so incredibly spoiled with having the state in your fingertips, and this is very, very nice way of working. And probably all of Estonians only realize that when we are where we have been put in another environment, that it is very, very kind of simple environment to operate in, because everything is digital.
Right. And so that's an incredible mentality to have, right? When the state itself is fully digital, in your experience, does that transcend into all the large enterprises in Estonia, where they also have a digital first mindset that Rob was talking about, or they're also stuck in old ways of doing business?
I would say in many areas the state actually has been better, but obviously if you're talking about financial services, etc., it's somewhat maybe better than the European average, but still I would say a long way to go in many cases. But I think when I was listening both Rob and Tom, I think what we are looking at today, from our point of view, is not really anymore the digitalization of something, some big industry, but we are actually looking one step beyond that. So we are really working on this kind of hyper personalization, and I don't know if that's the right way to say, but I feel it very strongly, and I have defined it for myself working years in a large bank, that everybody's talking about customer centricity, looking from a large corporation view towards customers. But what we as a small startup are doing are actually creating person centricity, meaning looking things from the person point of view towards the larger organization. And it's actually quite an interesting mental kind of exercise. I would recommend lots of people to then they realize how the industry often has been built and how it's thinking. So and I think lots of our core, our startup core has been built on the notion that, okay, actually I'm the person, and what are the things that how everything could benefit. And we have built this kind of quite nice win-win-win models that where all the parties are actually benefiting when we look things from that perspective.
Right. And who's going to own all this data that you're able to access, tap into, or potentially even create in a person-centric world? I know the whole world is now beginning to pay attention to privacy. There's GDPR laws here in Europe. There are similar laws in other parts of the world. As we digitize a lot more, particularly in financial services, how do you think about that data ownership aspect?
I always want to think that the data is owned by the individual, the person that actually leaves this digital footprint or the trace. Obviously, if you look at
I think we've lost Hedi for a second. We'll probably just move on and Hedi can join. Hedi, can you hear us? We lost you there for a second.
Yeah, so do you want me to finish or you want to move on?
Yeah, please go ahead. You were in the middle of saying the data is owned by the individual in your view.
Yeah, so obviously legally it's somewhat different, but I think it's healthy to keep that mindset, and this is what we really have done. So that actually kind of helps to put often the priorities to the right place. But yeah, GDPR and all the regulations are obviously something to follow very 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 well, and yeah, there is probably more to come on this matter. So.
Right. Rob, let me move to you. You talked about real estate agents being stuck in their old ways of doing things and their just very old-fashioned. The industry that you're trying to crack is a very people-oriented business. It's a relationship-driven business where I, as a real estate agent, need to spend time with a potential buyer or a renter or even a seller or a landlord. What is it that you're doing that improves the experience in that person-centric world that Hedi is, aspiring towards and working towards? Can you talk a little bit about that?
So relationships are changing, and that's the big realization amongst the industry, because there will always be a relationship, but that relationship is changing hugely. And I think this is where the progressive and far-sighted companies within the industry are looking to what is tomorrow's customer, because you have to understand the customer before you can have a relationship with the customer. And tomorrow's customer of real estate wants 24/7 access to information. They want to be able to do it on their own time with their device. They want somebody at the end of a phone or in person to be able to talk to for advice when they need it, and they certainly still want that relationship, but it has to be a much more accessible digital relationship. It's just as strong a relationship. There is a fear that a relationship is weakened if you're not constantly meeting and talking and holding hands, or not holding hands, shaking hands with somebody, and that's another relationship. So but the key, though, is that actually really strong future relationships are when a customer is delivered really good data and information on their own time, when they need it, when they're able to. So a little example, there's a number of surveys have pointed to the fact that the majority of property searches online are conducted between 8 and 9 o'clock at night. When everybody's home, the kids are put to bed. That's not the time when you need to be talking to somebody for, on the phone. It's when you want to be delivered this information, and the entity that delivers that information to you is who you have the relationship with. Another good example is in the world of fintech, again, is online banking. So, banks and customers now have a strong but a digital relationship, whereby there is somebody at the end of a phone every now and then when you need to talk to someone, but 90% of it you can access yourself through your app that's provided by either the existing bank or the new challenger bank. And I think that's where the real estate industry is going. It's about tomorrow's customer.
Great. Tom, the R in CRM obviously is relationship, and Rob has talked a lot about how relationships are changing. There's now a digital interface to manage relationships, and that's what you're doing. You're creating that digital interface for a large enterprise to work with hundreds, if not thousands, of small suppliers from across the world. What is it that you can do that really makes the life easy for the enterprise? Talk a little bit about the cost savings that you're offering them. And earlier on, you mentioned that these suppliers can get paid in a matter of hours as opposed to a matter of 6 months. Talk a little bit about why that's more efficient for the enterprise as well.
Yeah, no problem, Kartik. So you've got a couple of themes in that question, but if I start with the relationship piece and talk about what the suppliers are doing. So the relationship, as we've all talked about, is key here, and I think what we talk about in our with our potential clients is the fact that at the moment it's process before relationship, and that really does need to be inverted the other way. So it's relationship, and the process should just cement or provide the compliance and legality that underpins what the two parties are going to do together. So what our platform does for these large enterprises, it gives them their exact procurement process that they run now currently through various different systems and different manual interactions. We don't ask them to change any of their legal documents or any of the information that they require. But what we do is we subtly reframe those requirements in a way that becomes digital. So to Hedi's point from Estonia, so everything's done electronically now. All of your certificates for insurances or any validation that you need to do, everything is now electronic. So that really removes the time and effort away from the enterprise and allows the supplier, who's going to be the one who's delivering the services, to self-serve that information to the enterprise in a way that is still compliant and still robustly checked and risk managed. So the enterprise gets time back, basically. And in our pilots and live clients, we're saving around 10 times in terms of the time that they spend on their existing one-size-fits-all processes to using our platform, which translates into multi-millions of pounds at the big enterprise level. I mean, we estimate that globally, the largest businesses in the world are wasting billions a year on this small supplier management and really not getting any value from it. So that's one part of it. But if we flip to the other side, you've got the small suppliers. So now they can onboard and work with these enterprises in minutes. But when it comes to payment, typically you've got an enterprise payment cycle, which at best is 30 days, but maybe at worst is 60 or 90 days. And that can be really quite difficult when you're a small supplier. I remember running a previous business of mine. We were trying to get a contract with a massive UK company, but we couldn't take their payment cycle. It was just going to kill us, basically, if we'd have taken, it was 90 days is what they were offering. So we said no to that business, and it would have been a great client. So what we do in the platform is we work with a series of third-party finance providers who can effectively pay the supplier as soon as the work is signed off as complete by the enterprise for a tiny fee, usually around 2%. And the money is transferred same day, direct to the supplier. And the feeling that we've had conveyed back to us is that it's pretty magical when the money just turns up in your bank account the same day that the work has been completed. And you never have to chase. You never have to look back, like write the email, make the awkward phone call. You can just concentrate on the relationship, on the next piece of work with that client, or with a brand new client that you're going to be doing some work for. So it's really relieving that friction and uncertainty from the process.
Right. It's quite interesting how all three of you either explicitly or implicitly are talking about, even though there's a technology layer in the middle and the popular perception is that technology impersonalizes things. Hedi's talking about a person-centric approach, and Rob and Tom are talking about the relationship and the engagement and the deeper engagement that one can have, which is quite interesting for me, at least, to absorb. Speaking of deeper engagement, each one of you has engaged very successfully with venture capitalists and has raised multi-million-dollar rounds of funding. Perhaps for the audience, you could share a little bit about why you feel the VCs have been interested in your individual businesses. Clearly, the VC industry is all over digitization, workflow processes, improving lives of customers, but maybe talk a little bit about how VCs have been thinking about your respective businesses and where they see an opportunity for value creation in what you're doing. Rob, maybe you want to start this time.
Sure. We have an interesting mix of VC, private, and bank investors. We have 3 banks as investors and a number of VCs, and that includes Barclays Bank from our last funding round. And it's proving an interesting mix, actually, because the VCs bring a real sense of action, and scale is everything, and they make sure that we're focusing on the scale, and it's not just about getting a brilliant product, is get this product out there and get it scaled in a way that is going to provide that return for them down the line, which is very important. Then, having the likes of a bank on board gives you the opportunity to work with the product and to equally scale also. And then having private investment is really good for opening doors into various networks as well. So we have a nice blend where we probably get a bit of the best from everything. We've gone through 2 funding rounds, and I think the scaling element of it is really important. And I think that's whereby every decision you make, whether it's on product or whether it's on a customer pricing deal or whether it's on funding or who you're employing, is this decision going to help scale something by 5 or by 10, or is it just solving an immediate problem I have? And that's a sort of a philosophy that VCs are good at instilling.
Got it. Thanks for that, Rob. Hedi, how about you? The gig economy sector, clearly, as far as the ride-hailing business, food delivery business, is massive. How have VCs been thinking about what you're doing, which is you're working for the gig economy worker? Tell us a little bit about the VC sentiment in that space.
I think in our case, both the insurance part and the gig part has been attractive. So we clearly have solved the problem in those markets we're at. So it's we can show that we have reduced the prices for almost half to very many service providers. So that is a significant and kind of sum. Plus also the market capture has been really really well taken in. So that probably has been the main thing. I think the VCs clearly see and understand that the work as such is not gonna continue being the same for a long time. It's not gonna be typical 9 to 5 now, especially with COVID and all the work from home and everything that it's it's going to change, and why it's going to change is nothing to do really with only the individuals, but actually very much to do with corporations on their own, because they now understand that it's much easier to actually also outsource people and to kind of make it easier to shrink and increase your workforce, and that's going to result in lots of people actually working with much more flexible hours and more differently. So, and from insurance perspective, the similar thing, it's obvious, it's clear that this industry has been disrupted way too little yet, and there's lots of potential because of data and all the kind of new technologies out there. So,
sure. Thanks for that, Hedi. And you used an interesting word, outsource, which is kind of what Tom is doing, right? Tom is facilitating large enterprises to outsource and contract out their work to small suppliers. What's the VC interest or sentiment as far as your experience is concerned? You raised money earlier this year, right in the middle of COVID. Talk a little bit about that for our audience.
Yeah, so I think there's the enterprise software market is pretty hot right now in the VC eyes. I think, as you see, we've had some, I guess, home runs, obviously with Slack just being sold very recently. And some other notable ones. So I think what VCs are seeing is the Oracles, the SAPs, the big Goliaths of the enterprise software landscape really having their market share nibbled away at by more agile startups who can take certain aspects, even bring consumer style experiences into the enterprise software world in a way that really they haven't been brought in just now, and people have put up with clunky and quite troublesome user experience journeys and also functionality that really was one size fits all. So I think enterprise VCs are really interested now in that breakup of these Goliath platforms into their more substantial, smaller parts, really, where you can add more value. And you're right, we raised our seed round, first institutional round during COVID, all done in lockdown. We have an article on Sifted, if anyone wants to read it, about all the interactions and stats from the round, so feel free to check it out. But it was for us, it made sense to do it as a stepping point now. I mean, with the change that we've all talked about in the market, raising the money during COVID gives us a chance to deploy it now in a market where change is happening and we can have our most impact, really. So yeah, it's I think it's an exciting time to be like an enterprise SaaS startup and founder right now, because there's so much opportunity to really go after.
Excellent. And we love exciting times in the startup world. And I'm going to use that as a segue into my next and last question. We've got about 5 minutes remaining right now, which is, as each of you looks into the future, what exciting opportunities and times lie ahead for you in your respective industries for further, not just incremental change, but exponential change going forward? So maybe, Hedi, you'd like to talk a little bit about that, how you see the gig economy developing, progressing, going forward. You've got a co-founder who's been instrumental in setting the policy for gig economy regulations. He was a member of parliament in Estonia for 4 terms. Talk a little bit about how all that may play out.
I can see and more the kind of platform work and this kind of dynamic work logic is going to be here to stay, and the EU level, where Cachet has been part of some of the quite high level roundtables discussing the future regulations connected with that. We can clearly see that also the kind of high level regulator is looking at the same way. What are the bigger obstacles? And I hope this will, as also Tom's company and many others are trying to fix, is that it's not so hard to be an individual, do your work, get paid for your work, and actually have a sustainable and resilient kind of life, that you don't need to constantly worry about where can I go to doctor or pensions or whatever COVID hits, how I'm gonna survive. So to make that lifestyle sustainable, and I think that's going to be healthy for all.
Great. We look forward to that sustainable world. Rob, how about you? What does the world of real estate brokerage look like? Are you going to be a pain for real estate brokers going forward, or you're going to be bringing joy to every renter and buyer's face?
We're going to be bringing joy to the broker's face, KV.
Brilliant.
So no, the property market and industry is going to undergo massive change for a number of reasons. So, after even what we've experienced this year, the world of work and office space is going to become a different scenario. You're going to see, shorter leases, more transactional activity. You're going to see shorter time frames, and technology is going to help there, which means that the industry is going to change. I think you're going to see businesses are going to be able to conduct a lot more business without the having to swell the staff numbers and the overheads, which means you're going to see a lot more consolidation of the property industry. You're also going to see a lot more agile, remote working type property professionals who will be able to do a lot more themselves. So you may see numbers in the industry reduce, but you'll see the output increase. And I think that's going to reflect the nature of the property market itself as it becomes much more flexible, short-term, and a lot more activity happening.
Could you see a scenario, Rob, where a real estate broker is actually a gig economy worker, where he or she drives for Uber or does some food delivery in the morning, but in the afternoons does some real estate brokerage? Is that even possible, just given the flexibility and optimization that you're referring to?
Yeah, I think you could. I think it'd be slightly different version of it. I think you will find more individuals or small groups of individuals will be able to come together, work remotely, and cover quite a large area, because they're not being pulled and stretched everywhere. As opposed to a part-time individual, possibly, maybe, you could do that. But I still think that it might be full-time, but it's going to be much more flexible and not tied to big office spaces. Yeah.
Excellent. And speaking of big office spaces, Tom is selling into big office spaces. So Tom, you've got about 30 seconds to look into your crystal ball and talk about what the future looks like for the enterprise business that you're trying to build.
Yeah, thanks, Kivi. I mean, I think that the future for, enterprises in general, I think is going to become more accountable. And I think that with all of the tools between Rob and Hedi and all the other startups, what we're doing is, empowering businesses to do more faster. I mean, to take some of the Techstars terminology there, and allowing them to really have an idea and execute on it, rather than it go into a committee for a year or two and then something not happen. So I think we'll see more output, like to pick on another theme from the guys, from these enterprises, because the tools are now empowering and you can't hide behind the process anymore. So I think that's what we'll see from enterprises. And I think that from Paid's point of view, we want to see, a world where everyone feels empowered to work with everyone, regardless of their size. And that should no longer be a consideration. If Kartik's the best person to do the job and he works for himself, then you should be able to go and work and do some projects for the biggest multinational company.
Excellent. Well, that's a great note to end on. Thank you very much to Rob, Tom, and Hedi for sharing their views and thoughts on what the future might look like. And if this kind of future is something that's of interest to you, come and look us up at the Future of Finance Accelerator that we're doing in partnership with ABN AMRO and Techstars. Thank you very much to the Singapore FinTech Week for organizing such an excellent conference. Be safe, and wishing all of you an excellent end to 2020. Thanks.